On Tuesday, during the Asian trading session, spot gold failed to continue the sharp rally from the previous trading day, maintaining an overall oscillating trend. The long-short game intensified, and the short-term direction still needs further confirmation. From the perspective of driving factors, the short-term rebound of the US dollar index has brought certain pressure to gold prices. In addition, after the sharp rise in gold prices on the previous trading day, some investors chose to take profits and close their positions, and the emergence of selling pressure led to a pullback in gold prices at the openings. At the same time, the market still focuses on this week's key U.S. economic data, especially the upcoming non-farm payroll report. It is worth noting the trend of central banks around the world continuing to increase their gold reserves. Among them, the People's Bank of China has increased its gold reserves for 15 consecutive months. And more central banks around the world are also promoting the diversification of reserve assets and reducing their dependence on the US dollar, which has offset part of the short-term selling pressure to a certain extent and helped gold prices stabilize quickly after breaking below the $5,000 mark. At the same time, market expectations for further interest rate cuts by the Federal Reserve still exist, which continues to exert potential pressure on the US dollar and indirectly provide support for gold prices, making it difficult for gold prices to form a clear trend in the short term. From a technical analysis perspective, spot gold is currently in a short-term oscillating adjustment phase. Various technical indicators clearly reflect the pattern of short-term long-short gains, and it is necessary to focus on further changes in indicator signals. In terms of indicators, the RSI index is currently in the 50 to 55 range, slightly rising away from the mid-range with no obvious overbought signals, suggesting that short-term bullish momentum still has certain strength. The red column of the MIT indicator has shortened slightly, and the momentum column is gradually shrinking, indicating that the previous rebound momentum is fading. Bearish pressure has rebounded, and there is a possibility of further adjustment in the short term. In terms of key support and resistance levels, for support levels, the first short-term support level focuses on the $5,000 integer mark, which is an important recent support level. If this level is broken, gold prices are likely to further decline to test the support around $4,950, which has strong support strength. For resistance levels, the first short-term resistance level focuses on $5,055, which is an important pressure level for the recent rebound. If it cannot effectively break through this level in the short term, it will be difficult for gold prices to open up further rebound space and will remain in an oscillating trend. The strong resistance level focuses on $5,080, which is a previous oscillating pressure level. In summary, it is necessary to continue tracking the trend of the US dollar index, the dynamics of global central banks' gold purchases, and the release of key U.S. economic data such as this week's non-farm payroll report and CPI data. These factors will jointly determine the direction of short-term gold price trends. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.